So this question comes to us from Alex in Maryland, working on a case with some research of corporate records. And the question is, are intangible assets included on a financial statement? And intangible assets is a little bit of a gray area, but typically they're going to include things like copyrights, trademarks, patents, things that are not physically tangible of vehicles, real estate, equipment, something that you can see, touch, hold, or use. So these intangible assets, many times in the technology era, are worth as much or more than many traditional assets like bank accounts or real estate. So finding these assets sometimes goes beyond a typical asset search. For example, if you look at a balance sheet of a company, the balance sheet is going to have on that document the assets held by the entity, by the corporation. If they own real estate, it'll be on a balance sheet. If they own bank accounts, cash, it'll be on the balance sheet. If they own equipment, it'll be on the balance sheet. Now, if those assets are encumbered by debt, financing, UCCs, then that negative entry will show up on the debit side or the liability side of the balance sheet. But what about intangible assets? What if you hold a patent? What if you have a trademark? Intangible assets which have been depreciated or that have been capitalized by an exchange of some other asset like cash usually will show up on a balance sheet as that intangible asset. Sometimes the largest intangible asset for a company is goodwill, where if you have a brand name, if you have built up client base, that will show up as goodwill, or maybe even called blue sky in some transactions. The way that's determined is to first look at that balance sheet to see if there's a reflection of that. If there are other possible, hypothetical, valuable resources held by that corporation, just because they're not documented or itemized on a balance sheet does not mean they don't exist. One of the largest valuable assets that can be used by a creditor is technology, domain names, websites, databases. Those typically will not show up as a scheduled item on a balance sheet. So it takes a little bit of digging. You want to find out from corporate records, are there references to the number of clients that exist? Sometimes you can extrapolate it by how many employees a company has, how many clients per employee, what the revenue is. Divide that by their average transaction price. These intangible assets many times are tried to be slipped under the radar when it comes to claims of liability, claims of debt, judgments. Certainly they're hyped up when it comes to financing. So if somebody's trying to borrow money or convey the value of their company to a third party, they're going to talk about these other valuable parts of the company asset class. So that's another way to look for these types of valuable resources. If there has been any recent financing applications or even granting of capital, there may be references to these valuable company holdings in those documents. For example, a credit application might show that, we have the goodwill value of a company might be $1 million because we have these customers and this revenue stream and these projected future sales. And that doesn't mean that it's not real. It's not an inflated value. Look, if you have a company that has, let's say, $500,000 a month in revenue, and it comes from an income stream of recurring clients, repeat clients, subscriptions, that revenue stream itself is an asset. Now, technically, it could turn off overnight, but that revenue stream is often used by lenders to put a value on capitalization. So as a creditor or doing an investigation, you can also identify that intangible asset. Other often overlooked intangible assets are phone numbers. If a company has a phone number they've been using for a long time and it's identified with that company, you normally don't want to lose the number. So including that in your itemization, your scheduling of assets that you want to check into, it's a good idea to look at all those things, because many times a company is willing to negotiate a settlement or to work with a creditor when they know the creditor is looking at all the nooks and crannies. We had a case last year where the email address of the top salesperson was technically defined as a corporate asset. And when we found that email, that's where all the sales leads went into, all the customers knew that email, everybody's using that email. The court decided to grant that asset to the creditor. So rather than losing all that potential sales inquiry activity, the company decided to negotiate a settlement and clear up the debt. So intangible assets, intellectual property, those kind of things may not seem like they're valuable to you as a creditor, but it's very important not to overlook those when you're doing asset searching, because they can come in handy. And if nothing else, they can lead you to other potential tangible assets. Sometimes an email will lead you to other bank accounts. Sometimes a website domain name will lead you to real estate. So you want to make sure you search everything. So they may not show up on a balance sheet. They're certainly going to show up on internal documents for value. We had a client that was selling a chain of businesses in a regional area, and the sales price included the assets, the real estate, the equipment, all of the fixtures, and there was an additional amount added onto it for what was called blue sky or goodwill. And that was a legitimate amount because that business had a cash flow. So don't overlook intangible assets, don't overlook intellectual property, because it may help you with recovering debt or even valuing a company. Put your comments below, messages below, to let us know what you think and what questions might be good for future videos.